I want to go short up here near the
Testing. Is my sound coming through?
yes, it is.
Okay.
So let's say that we want to go short up here at R1, right? R1, that resistance area, which is the blue line. So if we want to go short at R1, we want to put in a limit order waiting there, right? So how do you put in an order waiting there? You can do it a few ways. You can say, I'm just going to put in an order right here.
Submitted.
I just click on this button that we have in the buy column over here. I'm going to stretch this out a little tiny bit. I'm sorry, on the sell column. So there's the sell column. I want to participate in the market at this price when it reaches this level. I got a limit order. Limit order means I need to get filled at that price. Otherwise, I'm not going to participate, right? So if it trades above it, we're certainly going to get picked up. If it trades at it, remember we're in queue and we don't necessarily get filled. It's like when we go to the theater, and in the old days when you used to go to the theater and they run out of tickets, then you would be putting in your, you'd have to wait for the next show, right? Same thing is happening here. There's 90 people that want to participate in the market at this level. So wherever it was when we click the button, we're in queue in that level. So we're patiently waiting for it to do its thing, right? Is it going to fill us? It's not going to fill us, et cetera, et cetera. So you'll notice that when you do this, the order is also sitting on the chart. You see it over here, right? You see it in both places because we're both on the same account, right? Our same account is the same here. Now, what money management is it going to use when we put in an order? Well, if you're putting it in on the dome, it's not going to use the numbers that we have here unless it matches the strategy that we're using. So if you're using it, if you're entering the order from the dome, it's going to pick this one over here, right? This where you enter it, it's going to use this one down here at the bottom. If you entered it on the chart trader, right, to enter it, okay, so I'm going to cancel this order. So you can cancel it a few different ways. You can cancel it by clicking X on the chart or clicking X on the dome, or down here at the bottom, there's another X, right? So this order is pending. It's not filled. If it was filled, you'd see a number over here telling you that you're filled. So if you want to close this down, right, you don't click the close button because clicking the close button is going to stop your auto trader. Then you got to restart it and you lose all of the trades that you had on it. But if you want to close the trade, you can do it three ways. Come over here, you can click the X on the chart. Or you can come over here and you can click the X up here. Or if price, let's say prices does this, right? It's off, you can't see it. You can tell that there's an order pending there because down here at the bottom, you've got an X. So if you click the X, it gets
order canceled.
Right? It's not going to fill us. So those are the errors. Now you'll notice that we're really close to the 1050. So when Ed is thinking about taking a trade at a particular line, what he does is he comes to the dome and just clicks it.
Order submitted.
You know what, I'm going to participate at this price. Normally, what we do is we don't do it this way. What we do is we say, I want to participate in this particular trade at the close of the bar when it closes back down, right? We have a 3-bar. But you can do it this way as well.
Order filled.
So now I've got my order. I can move my order around. I'm looking for 4 ticks to come back down in the opposite direction. If you're going to take a trade like this is a good spot to take it. If it gets too far up above where it is that you enter, right? You don't have to take your full stop, right? You can close the trade manually. You can close the trade manually 2 ways. You can have the order come to you. You can just click on each line and put it on the yellow. This is a good way to exit. You get out at the price that you want, or you can just say close the trade. Now be careful. If you close the trade, remember it's still going to stop the auto trader. It is a feature inside of NinjaTrader that allows you to stop the auto trader in an emergency. I've actually never seen a case, or maybe 1 or 2 cases, of people needing to actually use the close button over here. If you're going to be taking a trade and you find something funky, you're in a trade, you can click the close button. The other thing that you can do
Target filled.
is if you could right click anywhere in the gray area, right? You can see that there is a flatten everything, and everything in this
Target
account
filled.
is going to be flattened out, right? It's going to close everything, include and stop the auto traders. This is a safety feature that's built inside of NinjaTrader. If you want to stop a trade and not have the auto trader stop itself, then you can come over here and you can click the flatten button. Now, this flatten button only works for trades that the auto trader took. If the auto trader took it, that's fine. You can click the flatten button. If you're clicking the market sell button, the bid ask, all that stuff, or putting it in on the DOM, the auto trader will not know about it, right? And clicking the flatten button will not help. In order to get out of the trade, you either have to have price tap your exit or your target to get you out, or you manually drag the lines into price to get out. So that was a really good example of taking a trade on the DOM at a line, right? So that's what Ed would have done. We took 1 or 2 ticks worth of heat, and then it settled itself out. Now, if we were waiting for a 3-bar here, right, we would be getting in at 1 tick lower than the 408 quarter, and that would be getting us in down here, right? And that's following all the system rules and stuff. The difference between taking the trade and sitting on the line and taking the trade with the confirmation is that you're getting in at 2 different numbers. Remember, the more confirmation that you need that the trade is working, the more risk that you need to take. So if price is coming down over here, that means we got a pretty good confirmation that it's moved a good distance. It likely will continue. But that just means that the wiggle room that it needs is all the way back up to the top of the bar that we were on. What Ed does when he sits on front of the line is he puts his order right on the line. He gets filled, and if it goes too far against him, he'll close it. Doing it this way is actually a pretty clever way of getting filled much higher, right, than where you would normally be filled, and having your stop sitting up even higher, right? You're getting in over here. You can give it 3, 4, 5, 6, even 8 ticks worth of room. It's a lot better than having got in down here and watching it come up all the way there before it comes down. The only problem is when you sit on the line, right, you're expecting the Mack truck to stop right at your price. Now, when we took that trade, and in fact, it hit that price, it did it exactly the way that we would expect it, right? It hits our R1 line. Lots of people see it. The market comes down, right, from it. Very, very, very common. Now, is it going to come down 12 ticks to give us our first target after that we get 10? That we don't know. We just have to put in an order to find out. Normally, if you're going to be taking a counter trend like this in a strong market, you need to be very careful. Even though that the market's been rising, it's been rising pretty slowly and it's under control. Here, we don't, what we have here is a place where it is typically going to stop. Now, we've got a second reason to take it as well, right? Here's our purple line. Now, our purple line, we usually draw it on yesterday's value area, right? But yesterday's value area is so far down there, it's not going to happen, right? I'm going to grab this purple line sitting up there. I got spares that are sitting up there, right? So we've got our POCs. We're so far away from it, unlikely it's going to make its way 70 ticks to the downside unless it's screaming down. But by that time, we're going to be done anyway. So when you see an area where you got all of these lines kind of drawn, you know that it's an area that we need to concern ourselves with. Likely, it's not going to zip right through these areas because the areas that they have been traded are likely going to be seen by others, and it's places where they're thinking that the market's going to be going back up. So unlikely you're going to get through this area nice and cleanly. So our POC is still sitting down here. They've moved it since 4 o'clock in the morning, London time. And the same rule applies today as usual. The guys in New York did not participate in this big move. So there's a good chance it's going to come right back down to where it started, right? Somewhere in around this vicinity. $25 ticks away. It's not far. I'm just going to adjust my lines, do my thing over here. Yeah. If while you're waiting for a trade and you don't see anything, right? Follow through with the lines, right? Make sure that everything's all lined up properly. Our responsibility is to move our red line, our lime colored line, and our green line for today, because depending on where the volume's trading, it is possible that we may end up moving the place where we've got the most amount of volume. And if they continue trading in and around in the zone, we're very, very close to moving the POC a lot, right? Because we've traded a decent amount in this area, and it hasn't taken it much time to get there. So this POC sitting at 80.50 is most likely going to come all the way up here. What time is it now? It's 9:15. All right, so the Ed trade sitting on the line gave target. Right now, we would be getting in ourselves. Let's see what actually happens. Is it going to give 4? Is it not going to give 4? I'm not going to trade it. It's the time of day is not good. Meandering its way up. So today is Ed's favorite day of the week. How much do you like Fridays, Ed?
I'm already done trading. I don't really like trading Fridays.
Okay. So for the new folks that are here, why don't you like trading Fridays?
They usually call it Revenge Fridays. If you've had a good week, Friday's the day you give it back. And if that happens, you wind up actually giving back a lot because you get pissed off that you gave it back. Also, the market's going to recoup what it's lost, getting it to wherever it is now. I mean, if you look at these run-ups, that's not on fluff. I mean, that's, traders jumped in, jumped out, jumped in, jumped out. But it's not you or me doing that. It's the big guys jockeying. So that's quite an investment to run it up. And then it waits and it tries to attract more traders in. So Friday's kind of wonky for me. I don't like trading it. My track history on Fridays is not the same as my track history during the weekdays. No reason to be scared of it. Just for me, I'm more conservative on Fridays. I already traded today. I put my trades in Skype, and that's enough. Enough excitement for a Friday.
One of the things that we're reminded about all of our trading is that you trade to a target, right? Our target is what we normally go for a day. Now we recommend that you go between $200 and $300 most days, especially for those of you that are starting. Once that you get to between $200 and $300 for the day, you know what? Call it a day. Get good at making that $200 to $300 most days, right?
It's not about the dollars, though. It really is.
Well, it's the ticks, right?
It's the ticks. We go 2 net ticks a day. Two net ticks a day, if you can. 2
ticks? No, you need.
I'm sorry, two
points.
A
little bit more.
2 points.
Yeah.
2 points. Two points. 2 net points a day.
All right. So some days we're going to do a little bit better. Sometimes we're not. And once that you get consistent at doing that, you can either increase the number of contracts that you're trading or you can trade longer. And the trick is to keep the money that you make. So often you've got money in the till You take the next trade and you give it back, right? And now you're back to scratch and you got to spend the whole time over again. The only person that benefits once that you get beyond a certain target is the broker, because he just loves collecting the money, right? One of the people that I was working with a little while back, he was telling me that he was trading large. He was trading like 10 contracts at a time, right? And he actually ended up breaking even for the day. He traded a lot. He was in the hole for a bit, but he managed it. And at the end of the day, when he looked at his statement, he had $2,000 commission bill. It doesn't take long to add up that number, right? So if you can try to get the number of trades that you use to get to that $200 to $300, keep it small, you're going to benefit from it, because you're not giving money to the brokers. At $4 every contract that you're trading, they're taking $8 from us every time that we take a trade, right? So, we either try to pick up an extra tick to pick up the commissions, or what we do is we don't overtrade. Make your target and get off. The longer that you're in the market, the longer it is, well, the more at risk that we are. And it's not endless winning, my good friend tells me. Why can't it be endless winning, Ed?
Because we don't know anything, and all the limits just sit there and wait for the market god to come and fill them or take their money. That's all we really do. So it doesn't happen all the time. It usually goes in cycles. The market cycles up and down. Well, traders tend to cycle win and loss ratios. So that's why if you hit your target with the minimal amount of trades, you're done. If you keep pushing it, you're going to change that cycle and you're going to enter into the next cycle. And the next phase after winning is losing. If you start out losing, well, if it's something you can recover from, great. But if you can't, you hit your last limit for the day, you're done. And that pattern has to stay consistent.
It's really important. If you've lost more than double what you normally make on your typical trading day, you got to stop. And that particular day, it may not necessarily be that you've done anything wrong. It's just that the trades didn't work. So you don't want to turn a losing day into a catastrophe, right? Don't give back a week's work because you are revenge trading and you're trying to make it back. Most people that lose their money tend to lose it in a very short period of time, because they're going at it. And you don't take a trade, it's a losing trade, get out of that zone. If you look at that trade and you look at it and you say, you know what, I don't know why that trade didn't work, I would take that trade again. Please, just wait to get out of that area, right? Get out of that area and then try it again, right? Or wait for a good support line. Yesterday, I got myself into the hole on that first trade. I was looking back, I shouldn't have taken it there. Yes, there was a ledge. It was a who got hurt trade, but it wasn't really on one of the decent support lines. So, the first trade down 300. And then the next trade, I would definitely would have taken that one again. And that one just didn't work. So I was sitting there minus 500. After I closed the room, I took a couple of trades. I got it down to minus 200, and I just didn't have enough time to go back. So, yesterday ended up being a modest losing day. Remember, if you can make that $200 to $300 most days, at the end of the week, right, on a $5,000 account, you've got $1,000. You're going to be making more than 10% on your money. So concentrate on making that modest target and stopping, right? Now, if you're new with us and you haven't been trading for a while, you trade as much as you can, right? I don't care if you're racking up the losses or you're racking up the wins or you're just spinning your wheels. So that we don't care about, because we want you to get comfortable with the platform. It's going to take forever for you to get comfortable with the platform if all you're going to do is take the 3-4 trades and then stop. Trade as much as possible for the first little while. Once that you get the hang of it, right, and you're beginning to see it, Then what you do is you go into acid test mode, right? And what's acid test mode? Well, we want you to trade an account as if it were a SIM account, as if it was real money. $5,000 account. We want you to trade 2 contracts, $200 to $300 a day, and stop. Lose $600, we're done, right? If you want to take one more trade, come back hours later when you're completely away from the zone that you're at, and you can reset your mind. You can say, okay, you know what, this one would be a good place to take a trade. That's fine. But otherwise, just wait till the next day. There is no reason to be doing this. Now, the reason that we get you to do the acid test is because we want you to trade it as if it was your real money, right? We don't want you to risk your real money until you got a handle on this, right? So do your test, pass it, and then use exactly the same method that you're using when you were in your acid test with your real money, and then you'll be good to go. Okay, so that last trade, surprise, surprise, right? Came all the way up to R1 and is bouncing down. These lines here are very, very reliable. The reason that we look at these lines, we got a few new people here. These lines right here are the floor trader pivots. It's a standard indicator in NinjaTrader. They're the lines that the floor traders would use when they were trading. When you take the floor traders, you know, the guys that were yelling at each other with all the papers flying around on the trading floor, those guys didn't have monitors to keep track of where prices were. And what they would do is they would take yesterday's high, yesterday's close, and yesterday's low, run it through a formula and get deviations away from the middle of that range. So the PP is the primary pivot. It's the middle of that range for yesterday. And then you've got one deviation away. That's where R1 is. And then you've got a deviation on the downside as well. Right? They don't have to be the same size. These lines, the longer that you look at them, the more respect you're going to have for these lines. And when I took that trade up at the very top, I just sat right on the line. Look at that. They tapped it by a tick. How is it that price travels from 92 to, let's call it 8 points, and stops right at a certain spot? And I put my order right there, and it gave me target. You know, there's a lot of people that see this particular thing, right? So the market moves up and down. I remember one of the first courses that I bought when I was trading stocks when I very, very first started. And in the Invest Tools manual, they talk about why the market stops and does certain things in certain places. And it's like Ed says, right? There's certain patterns that everybody sees. And when they see that pattern, everybody thinks that it's going to fulfill itself. And then they take a trade. So it becomes kind of like a self-fulfilling prophecy. You see a particular situation, a certain pattern on the chart, and then a whole bunch of people pile in. So if you've got a double bottom on a 15-minute chart where there's a ton of people all over the world looking at that double bottom or double top on the 30-minute chart. So it becomes like a self-fulfilling prophecy. That's why prices stop at certain places. Well, the pivots, the floor trader pivots, if you go into the indicators, there you go, right? All the indicators here are all in alphabetical order. You scroll down to the P section, right? And they're there, right there. So I've already added it down here to the bottom. Remember, in NinjaTrader, this is the list of available indicators, everything that's available here. Down in the configured section are the ones that you've actually configured. So if I click down here and I scroll up and down, you can see all the indicators that I have on my chart. We got the range bar close telling us where this 10 tick bar is going to close up and down. We got the robot boxes, the volume delta. We've got two of them here, one for the indicator, another one to plot up here so that we don't have to be looking up and down. And then the volume and the moving average. If you're not changing anything on your chart, don't click OK. If you click OK, you're going to lose your delta. So don't be losing your delta. It's important. Well, I think it's important to be able to refer back to it. So after that, I start my charts. I rarely do I go in and do something on it because I don't want to lose my settings down here at the bottom. All right, we've got 1 minute to when the market opens. Actually, never mind. It's just opening up right now. Let's see what happens here. We are sitting up way high. I would not be surprised if we make a nice little beeline down. But before that we do, I think that it'd be really nice for it to double top on the way up. Not taking it at the moment. I'm pausing it and turning it on at the same time. Don't want a 3-bar at the moment. It's usually a little bit violent first thing when the market opens. Just let it settle itself down before that we start taking some trades. If anyone has any questions, let me know. Concentrate on the trading in the meantime. So we're coming up.
Can I see more of your 30-minute? Yeah. Okay.
Okay, our value area is coming up. Yeah, I was looking at it and said, don't like it on the other monitor. Okay, so we've got a 3-bar here. I'm going to let it take this. It's right on the value area, high. And we've got some buying going on. Let's see if it follows through. I'm looking for a little bit of a push back up after that it settled itself out. Good place to try it. I'm actually going to use an offset of 0 on this one. If it gives, let me save a tick on the bottom. Somebody's messaging me.
Order filled.
It's my little sister. All right. See what happens here. We're looking for a couple of 4 ticks on the upside. Our delta is still showing that it is red, which is not a good sign. We're still in behind the bottom of that bar in a good spot. We're in around 4,000. It should hold.
So watch the volume as it rises. Does it go with the tick or against the tick?
It's just
Or
sideways.
does the tick go against the volume?
Doing nothing. So if this bolts up from here, there's a good chance it'll make it up a little bit higher. I'm going to stretch that second target up to just under 405. Right in the middle of this little jog that we have here. If it doesn't go, it doesn't go. I'm going to click on the F to make it easier to see where we're at. So we've been negative this whole time, but it hasn't come down and stopped us out. It's come up a few times. It's been making lower highs on the delta. I think we're going to get tagged.
Buyers are losing it.
Yep. But you never know until it's over. You might get a spurt right at the very end and you say, oh, I closed it for no reason.
Yeah, you got to pay to find out.
Yes, sir. A little bit of buying going on still.
Me personally, I would have taken a tap. You know, when it came down there.
You would have taken a tap down here?
Yeah.
Okay. Well, okay.
Yeah.
All right. I'm going to give them
Target filled.
Oops. there's one line. I'm just gonna.
Stop filled.
So I just gave back the 100 that I made earlier. It's not going, and I'm gonna take a small loss on it. Nothing wrong with taking a small loss. It's $150 on that. If it ends up going down and breaking down, I'm going to go short on close.
So short on close means you're behind the box that's building on your stop, right?
Yep.
And you're 20 ticks forward, unless this bar closes down. Then you're 15 ticks forward, maybe something like that.
Watch this then work to the long side. We're near that 4,000.
Oh yeah, that's right. It's a magnet, both sides.
So the low of the bar that we got in, I'm pushing down on my center scroll wheel button on that bar. The low is sitting at 99.50. The bar that's building at the moment went to 99.50. Technically, we would still be in this trade.
The PLC moved as well too.
Oh, look at that. Concentrating on the trade and not seeing. So that shifts everything around. There's the red over there. And so it's really not doing anything. So, there's no harm in trying to get out of the trade with a lesser loss.
Order filled.
You didn't come out of the box.
I did by a couple ticks.
Okay. Well,
And the other problem is that the POC moved up here.
yep.
You stinker.
You had to come out of the box by 50%.
Yeah.
And then close down.
Stop filled.
Okay.
Fridays. You gotta love Fridays.
Well, yesterday was the same thing. Got myself into a hole.
Yeah, well, the rule was you got the box. You got to come out of the box by the bar that comes out of the box at least 50%, and then close down. Then you can wait maybe for a pullback back into the box, and that bar that gets you in, if it's like no more than 50% of the box, that has to also close down. If it closes up, then you got to make a decision. But those are rules, and you got to follow those rules. And that's what this is all about: following rules, consistency every single time. The same event has to happen.
No 3-bar on that trade either.
Yeah. And we can't anticipate winning. All we can do is anticipate getting in at the right place based on the rules that we live by. It has to be that way. So we got a box to the upside now. You got a blue bar breakout. It could be a who got hurt trade. Who knows? This bar will tell. And then, you take the next trade. If the area gets kind of wonky, especially because the POC moved up, then you guys got to be extra careful. So the market, there's another factor in the market. Supply and demand. The support and resistance is dynamic. The static ones are R1, S1, primary pivot. But the other stuff, the point of control, value area highs, lows, that usually has more to do with supply and demand zones where traders are looking to either get in or get out. or larger traders are sitting waiting for their areas where they market order in, and they fade in with market orders just to bring it to certain areas. That's another concept, but uh, we can't look at everything all the time. So the best thing to do is just look at the event that's happening. What are my rules? What do I need to see happen? And then react accordingly. So the same kind of event happened. In the box, it was 10 tick range, right? Low peak the top, low peak the bottom. They smacked the top, smacked the bottom. And now they did the same thing, but now it looks kind of different because it's not really sideways. They expanded the top by 10 ticks. Well, okay, now we got a 5 box. They may expand the bottom by, it's not 5 ticks, by 10 ticks, 2.5 points. They may extend the bottom now by 2.5 points. And now we've got a 5 box. If you go to the upside with those 2 bars, and if we get another one down below that box, we'll have a 5 box to the downside. So now we're in a 15 point range. One way or the other, they're going to finish that box. If it's up to the upside, we'll have stacked 5 boxes. If it is the downside, it'll be stacked 5 boxes to the downside, and that tells us what direction we're about to go to. Because anything out of that is going to move. It's going to move to the next 5 box.
Here's our 5 box. So we're going to draw it like this. And I'm going to grab it. I'm going to pull it back so that it's not interfering with our price. And here's the bottom side of it.
That's a little big for a 5 box.
It's 5 points.
It is?
95 down to, oh, you're right. Never mind. So hard to get good help, Ed.
Just programming help is hard to get.
That's better. Let's get rid of these. This one. That one. Let's grab this one, put that one back there. Yeah, it's making a bunch of boxes. That's not the right size. Click this one. Control C, Control V. That. And let's stagger another one up at the top. All right, so we're in this 5 box in here. Peaks out the top. We can trade back down into the POC. Oh, yeah. So this robot box.
Yeah.
It's Friday. So if you look at your 30-minute chart, look what they're doing, huh? Here is the place. We're talking 402 down to 4,000. This is where the bulk of it happened. Every time they peak out the top, they come back into the middle of the range. Right? This is where the bulk is. Green line's coming in from the bottom. Now remember, our profile moved just now. The lines aren't as respected as they would be if they had been there for a while. Come on, move out of here. We can't do anything here. I got burned once. I'm not going to take another one in here. Usually what the market will do in the morning is it'll test the bottom, test the top. And that's what I assumed that was going to happen over here. They'd push down a good
We got
decent
news.
amount. Didn't use at 10. Yeah, news at 9:45, but it's just minor stuff. Okay. Blue bar closes down back into the range, a little bit higher than where we are. I will try it back into the POC. They've come up a little bit higher than where they are before. If it closes down, it's a play back into the green line. If it closes up, we'll just wait. Got a blue bar. Side enough. Is this wide enough for a launch pad, Ed?
What's that?
Is this
Yeah.
wide enough for a launch pad?
Yep, you're making a launch pad.
Oh, there she goes.
Oh.
So we're into the next 5 box.
Yeah, so that green line is a good spot. Yeah, that
For
bottom
what?
green line for a pullback, and halfway in and then back up to fulfill the next 5 above.
Well, this is exactly what happened yesterday. They came all the way right back down to the green line and straight up.
Yeah. Well, patterns repeat. We do the same thing every day. You come in, make the donuts. Same stuff, same patterns. Just got wait. And sometimes you get it, sometimes you don't. But then you got that top line up there at double top. That's another thing to consider. We are way extended. Look left on your 30-minute. Anything up there? Within a reasonable amount of time? Oh,
No, not recent.
Holy moly, look how far up it went.
That's what I mean. It moved a ton.
Whoa.
So there's a 3-bar short if someone wanted to take it. I wouldn't take this because it wasn't as high as what I'd like. If it makes its way down to the green line, it's kind of the bottom of those boxes. Be an interesting place to try it long.
It hit your purple line, though.
R1 is a little bit higher. And our previous swing was a little higher, so it hit my purple line. When you trade it in that area, don't you have to consider the most recent trading area?
Yeah, well, it hit the down close bar slow and turned around. Remember, it's a quickie little scalp. There's about 20 reasons that you can say to take it and 20 reasons to say not to take it. So for me, if I put something on my chart, it means something. And if something happens there, I'll take the risk because that's the whole idea. And your risk on that was probably about 6 ticks because if it traded up, closed up.
Would you have traded the line or would you have traded the...
I would trade the line. I would trade the line because that's the smallest risk. Right? If I look left, where's my stop?
Over the swing.
Yeah, and how many ticks is that to the line tap?
The line tap is 11.
No, not that. No, the red bar to the
here?
right. Your entry bar in a 3BR.
Yeah.
Yeah. What?
So that would have been 950, the top of it.
Yeah.
It made it all the way down to 5.
No. So if
plenty of
that's
ticks.
950 on the tap, you get in at 1 tick lower. What's the stop? What would have been the risk?
Well, the risk would have been up to the top over here.
And how much is that in terms of ticks?
That's 11 up here. and one tick below it, so it would have been 2 points.
No. No, because you're getting in at halfway in that bar to the left.
This is the bar here that you're talking about.
Okay, so
right?
what number is the tick in on that purple line?
A tick in on the purple line is 9/4.
9/4. Okay. And what's the high of the red line to the left?
11,
Okay, so 9/4 from 11 is how many ticks?
7,
7 ticks. That's your risk. How many points is that? 1.75.
under 2. Under 2,
Yeah.
right?
Yeah. So
1
that's,
3/4.
so that's your risk, right?
Mhm.
Yeah. So and you had 10 ticks on the bar. So you got 8 ticks out of the first bar and maybe 4 more out of the second bar, and you're out. So there's your 4 and 8. Because we're swinging, right? I mean, remember, it went from the bottom 5 box. Now we're in the top 5 box. Now we'll just kind of ping pong in there a little bit. These are not exactly ping pongs, by the way, because you have to have smooth bars up and smooth bars down. We're getting one directionals. So you got a smooth bar up, but now we're chopping the top half of that 5 box. And you wait and see what happens. It looks like it wants to break out again, but who knows? Since we have that.
We got news in 10 minutes.
Oh, yeah.
Maybe
Well,
we got big news in 10 minutes, not even news.
yeah.
Like big news.
So it might be just holding here until the news comes. Who knows?
Well, if it closes up over this line, R1, trades up over the line and closes back down, I don't mind trying that short. Don't break down. Go on up. Tag them. You got a whole bunch of short stops sitting up after 11. So there's a bunch of short stops over here, and there's a whole bunch of people that are going to believe that it's going to run to the moon once this goes. So what I'd like to see is I'd like to see them come all the way up here, trade in this, invite everybody long, stop everybody that's short, and then as soon as it trades down, maybe in and around where the purple line is, maybe somewhere in there around 10, hop on the bandwagon short, because they even if they plan on going long, they're still going to take everybody's stops before that they go. Our robot box is not terribly clean. It's got big wicks on the top and wicks on the bottom. It's closer to what Ed calls a knife fight, and nobody wins in a knife fight. Okay, I got a nice blue bar over here. Okay, doing exactly what we were saying. I'm clicking the short on close. If it closes up, it's done. If it closes down, participate down. I'm looking for 4 and 8. Higher up it goes and comes back down, the better it is. So they one-ticked them, like they one-ticked me down here.
News.
A little bit of selling going on. With the delta, you can see the minus number. Oh, it just turned positive.
News.
Yeah, but news is 7 minutes away.
Looks like they have an agenda of getting to the highest high that they can before the news.
Yeah, well, that's gone. Actually, if it closes down, I'll try it again. It's still going to be below the area that we were in. This is enough to get people excited about going long. The close is going to be down here at 10 quarter, which is far enough away from where we've our previous swing. That's 3 ticks. If it closes 1 bar up, then forget about the whole thing. So our next level, I don't know if you want to consider that. Our next level is going to be 2025, somewhere between 1875 and 2075. This is where the bulk of the volume was traded over here. The highest level is right here at 20. Yeah, and they're at around 20. And got these 2 double tops on the side. The high of the range is at 23. But it's going to get close to news by the time it gets up there. I have to wait.
I would put a sell order at that 4026 line that you got up there.
So that 4026 line, what, all the way up there?
Yeah, can you squeeze
we
your
really
charts
want it all
just
the
a
way up
little
there?
bit more, that 30-minute? No, the other way. Yeah, I'd put it right there, 2 ticks lower. No,
2 ticks lower.
no, right on. Yeah, the blue line, 6.5 on the other, but I'd put it, yeah, right there. And now your
25.
stop is to the left.
This guy?
Yeah. How much is that?
That's 28.50.
Yeah, I know, but how
So
many?
you're talking 3 points,
3 points.
3.5 points.
And how many ticks is that? 10, 15 ticks?
12.
15 ticks?
Yeah.
Yeah. Yeah. Well, that's what it's going to take. I'd give it 16 ticks just in case, or 17 ticks. Actually, it's almost a $5.
So
But
you
the
want the
reward,
order at 25?
yeah, but you want to get in, and it might tap it, it might go over it a little bit, it might go short of it. But it'll happen quick if it's going to happen. And the reward is back down to 12 or 15.50, wherever you got the value area low. I'm high right now.
Order
Now,
submitted.
this is a different kind of thing. But, I would do 1 contract. Yeah, these are 1 contract.
Order
The
canceled.
reward is big enough. You can do the 1 contract. And the loss, it's controlled loss. And I'd set it 20 ticks for the minimum for the reward.
I don't know if I've got one set up like that.
All right, well, whatever. You could always put it in and then move the target.
All right, let's use this one here. That one.
Better hurry up. News is coming.
Oh, yeah. So you said you wanted it at 26?
Can you
No,
see?
20.
Okay, now we're trading to 30. So that stuff needs to be on the 30.
Yeah. So let's call it
the
24
buy-sell
quarter.
lines and all that stuff. It needs to be seen on the 30 because that's the chart we're trading.
Yeah. So, no, we don't want to do that.
In other words, chart trader has to be on the 30.
Yeah, we'll get there.
News is coming.
Order submitted.
Yeah. There you go. Okay. And let's do this one and that one. And this one here. And there you go. Oh, wrong one. This guy. And I haven't seen anything that I want to take. All right. That's back.
Where's the stop?
The stop's going to be up here.
Oh, it's going to
This-
shoot
this
in
one.
automatically on
Yeah.
fill?
Of course.
Oh.
That's why it took me so long to get it in there.
Oh.
Okay, here's your 10 o'clock news.
Okay. This may be a wild ride. And it's automatically going to shoot in a 20 tick target?
I'm going to move that target down.
I don't know if you'll have time. Or it may not happen.
It doesn't look like it's going to happen.
Well, we'll see. What is it, 10 o'clock?
Yep.
Wait, don't give up on it yet.
I'm not doing anything. So we've had a couple of trades happen, or at least marked, but we don't trade in this little 10 o'clock bubble.
Yeah, at around 10:03, we'll just take it off. Or you could leave it, see if maybe later on in the day it happens.
So they brought it on up for the news. We'll see whether or not if they keep it up here or whether or not they let it ride down. Look at your volume, right? The volume that the bulk of the volume has switched in this little zone in here. So this is a nice little kind of up from where we're at. If it trades long, we've got a blue bar. I will take it long. It's got to make its way up to 12. Closes down. Well, that's another story. Never mind.
Yeah, I don't
maybe.
think it's going to happen. But, for later, if it happens to get up there, you might want to try it. It's a decent one.
So if we get a bar that closes near the purple and then closes back down, never mind. So our average is turn red. Average is turn red, which means that we're only going to consider the trend shorts. So we need green, red to get back in. And it's making its way. So you remember we were talking about trying to take it long from the launch pad, sitting at back here where we made all those boxes. Is that still valid, Ed? I usually don't trade it that way. What do you think?
Is that a 3BR?
It's coming up on a 3BR.
Yeah, trade the 3BR. Will it take the trade with that other standing order?
Order filled.
Yeah.
Oh, it does. Oh, cool.
But I clicked along on close.
I thought it was like OCO or something.
No, this guy, no, it'll take it. It's just going to ignore that one.
Huh?
It might click when it gets stopped out. It might be
Stop
gone.
filled.
Yeah, never mind.
Uh-oh. Yep.
All right, I'm going to just go to the bathroom. Everything is paused. I'm coming back. Sure. Stop me out by a tick and go back up. Both of those trades. Actually, the last few days, both the trades have come and got me by just a tick or two, and then they've gone right back up and given the target. Take a screenshot of this.
What do you think that is?
The market not playing nice.
Huh?
The market not playing nice.
Yeah.
Okay, we've got the bottom side of our robot box sitting over here. Even though that we got a blue box over here, we didn't get a blue bar that closed at 50% up. So we're negating this as being a long. Okay, we've got the 4,000 threshold to deal with here. Technically, this is a who got hurt. I'm going to try to pick it up from the upside down. I'm not going to take it down. I'm not going to take it long here. Okay, and I want to restart this. Come on back. Okay, there's a 3-bar right back to where we started. We're a little bit lower than the previous swing that we had over here. Give us one more bar up, please. At least one more bar, so we've got some room to trade back down into that. That last trade that I took that got me into trouble over here was right in this particular spot. All right, I'm pulling that order up at the top.
Order canceled.
All right. So right up into the back of this box over here, if we get a bar that closes, if it comes up one more bar and closes down, we want this short. It's with trend, lots of room back down to the 4,000. Our POC has not moved. It's still in that vicinity. We need the market to move up until almost 5. Okay, a steady amount of buying going on. All right, that's going to close at 401. Huh? All right, try you short there if you
Order
if you
filled.
come down. Came down, printed my exit, no fill. Looking for it to make its way down. Come on. Our stop is in a good spot. And our, oh man. You're going to make a box right on our value area line, the POC, I mean. Pop up the bottom.
Target filled.
What time is it? 10:10. They're still liking this price level over here. The top of the range is sitting at 2.25. Bottom side of it is 950-ish. We trade over 405 and close back down. And we'll try it short one more time. Come on, you got to get up a little higher though. There we go. Okay, if this closes down, I will try it short. A little bit of buying going on. The higher that goes, the better. Okay. One more time. If it closes down, I'll try it short. If it get one more long bar, then we're going to get a 3-bar anyway. Our most recent line is sitting at 775. It's meandering its way up. So I'm looking at the NASDAQ. The NASDAQ doesn't look like this. It looks like it's taken out this ledge. So this version here, if you're looking at my chart, you can see that we're sitting in this little zone and the NASDAQ's taken out this little ledge high and kind of coming back into the range. The ES always lags. As it starts trading up to the upside, we can forget about the short. If it begins to trade down, there's a good chance that we'll be able to make it right back down into the zone over there. If we get filled, I'm going to try to make 5 ticks again. If this closes up, it's likely going to go over this little ledge. So I'm just using the NASDAQ as an indicator. Yeah, it looks like it's going to run up. There she goes. So it's going to go right into our purple lines. Okay, and into R1. So you notice the NASDAQ's R1 is different than ours. We're still a little bit below it. And try to get a little bit bigger target on this if it comes back down. Oh, I lost my NASDAQ. It's in behind. I'm back. Let's back up here. Always on top. There's that. And there's this. Okay, looking for it to pause in and around this area. Beep tells us that there's a trade coming up. It's moving up our yardsticks over here. Oops, grabbed the wrong line. So what time is it? It's 10:15. There's no more news. NASDAQ's made a new high. Likely they're going to come back into the range. This bodes well for us over here. Our average is now green. They aren't fooling around over here. They've made, maybe that 25 that Ed was talking about isn't unreasonable. Yeah, I'm going to let it come short if it allows it. And no short. It's because it went green. All right.
Oh, man.
All right. Nothing like missing trades.
You don't really miss anything. But that one would have been nice.
Thanks, Ed.
Your NASDAQ went red. So,
Yeah, I know. My NASDAQ went red.
yeah, you could have gotten an intra-bar. If your NASDAQ, if that's the indicator of choice, it signaled you go red.
Order submitted.
It's left.
Oh, it's, yeah, it's, I don't know, what are you doing? Now, you know, it's already hit first and second target.
Mm-hmm. Yeah.
Order filled. Target filled.
Okay, let's see it come down. I've got my second target if it cooperates. Never mind.
You're in recovery mode, right?
Yeah, I know I'm in recovery mode, but I'm running out of time for the room. So the idea in recovery is take 100, take 100, take 100, get back to break even. But come on now, that's it. One little push down here.
Watch the volume. Watch the ticks up and down.
So the Nasdaq's kind of settling itself out. You know, I'm looking at the volume. The deltas, they're just buying here. It's like,
And yet it's
we're up.
ticking down.
We're up in the stratosphere.
Yeah, it always amazes me how it has no relation to real economics. It's just a bunch of people from Dubai playing with everybody.
So we've got 4 ticks in it, 5 ticks, no ticks. Come on, breakdown.
Just keep watching those ticks come in. So the power shift between the buyers and the sellers. Yeah, see the buyers are losing. I mean, they're starting to win. The sellers are losing. Yeah, they definitely want to hold that line.
But if they break it, it's going to be clear sailing down there.
Yeah.
We got enough room all the way down to 7. Let me look at the dome over here. So we've got from
They know where all the stops
probably
are.
9. I know they know where all the stops are. But if you look at the dome's got 200s and 300s. They're all building. on the short side. You see over here, all these numbers here.
Pull up. It's called a pull up, right? Because they're supplying. Demand is to the upside. So they're supplying. They're saying, you want to get in, yeah, come up here. I'll sell to you.
Yeah, man. I'm basically in a trade that doesn't cost me anything. If it breaks down, that's great. If it takes me out, it costs me nothing other than the commission.
Well, he's still in recovery mode.
Yeah, if it breaks down, I won't be in recovery for very much longer.
Yeah.
Here it comes.
It's always a trade-off.
Say goodnight.
No, not yet.
Yeah, say goodnight.
Yeah, there it goes.
It's coming. Those big orders, they're all gone. They've eaten through them.
Yeah.
All right, folks. I need to make a couple of calls. So, James, I'm going to call you in a minute. I'm going to go to the kitchen and get something to drink. We're going to review what's traded. Preston, I'm going to call you thereafter. Did you get the email from Ninja Trader with the new link for the password? Preston's setting up his account. I'm going to keep the money.
Tony, you want me to give you a Skype call later about getting my update?
I will message you.
All right, thank you.
Okay.
I'll check, Tony. I've been watching you and had to switch back to my microphone.
Yeah.
But I'll check right now. Yeah.
Notice what's happening here. All of these orders are filling in, and they're mostly on the buy. So I closed that trade out. I kept the 50. There it goes up. Yeah, we never know which way it's going to go. All right, I'm down a little bit. I'm going to try to make a little bit more to recoup. Oh, look at this. Wait, hold on, Ed. Where are you? I'm going to put in my my order up here. Yeah, but I don't want to do it with 3. I do it with 1. And
Order submitted.
24 right here. Okay. I'll keep you guys posted. What's going on?
Put your stop in. Don't forget to put your stop in.
That is the stop. It's got built-in ATM. All right. I will see everybody soon. Have a good weekend if I don't talk to you. Bye, Ed. Thank you.